The Home Mortgage Law Show is a paid program and is intended as a resource guide for education, information, and entertainment purposes and is not intended to provide specific legal advice. The information that you hear should not be used as a substitute for competent legal advice from a professional attorney. Hiring of an attorney is an important decision which should not be based on advertising or the information that you hear today.
Good afternoon and welcome to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont and Regal Tax Advisory Group. And we're with you every Saturday afternoon on our flagship station, News Talk 610 WIOD and 970 WFLA. And don't forget, on the go, no matter where you are, whether you're at Publix doing your groceries or at the gym, working out, or at the beach, you can download that iHeartRadio app totally free and listen to your favorite radio stations and, of course, the Home Mortgage Law Show. We're also on social media. On Facebook, it's the Home Mortgage Law Show. On Twitter, Morris DuPont PA. We have attorneys Will Morris and Shay DuPont, as we usually do. And, of course, our phone lines are open. Toll free to call the show, 866-610-NEWS, 866-610-6397. AT&T Wireless customer star 610. And don't forget, these are tough economic times. Thousands of people have come to Morris DuPont PA for legal representation, whether it's foreclosure defense, short sales, bankruptcies, loss mitigation, loan modification, short payoffs, deed in lieu, debt settlement, credit restoration. Morris DuPont PA is the place to go. Shay.
Look at you, Natalie, rattling all that off.
See that?
Very good. Well, it's only been, 5 years now.
Almost 5 years.
Yeah, 5 years. It's going to be 5 years that the Home Mortgage Law Show has been on the air. We have been giving you advice about your home mortgage, whether it's loan modification, short sales, a short payoff, settling that second mortgage which could be unsecured. All these different options that became available to homeowners when the Making Home Affordable program came out in March of 2009. What happened was the federal government was seeing the high rate of foreclosure, all the defaults, the crash of the housing market, so that the values of people's homes were going way down. And of course, if you have negative equity on your home, if you owe on your home less than the value of your home, if you're underwater, there is a chance that you are either going to willingly default, or because of financial hardship, you are forced to default on your mortgage. And the federal government wanted to create a program that was going to help homeowners by allowing homeowners to do something that normally no lender would ever do. And that was to modify the terms of your existing mortgage. Yes, I'm a lawyer. I know that there's ways to modify contracts. Just because you entered into a contract doesn't mean that the contract cannot be changed. Any contract can be changed if both parties agree to those changes. And what happened was the federal government, in order to allow these lenders to borrow money from the federal government, told them, you're going to have to agree to this program called the Making Home Affordable program, the details of which can be found on makinghomeaffordable.gov.
Or the Home Mortgage Law Show page. It's all already on there.
Absolutely. On our Facebook page, on the for the Home Mortgage Law Show, our Facebook page, we're going to put the makinghomeaffordable.gov website up there. So under the Making Home Affordable umbrella, the government created different programs. And I'm going to rattle off a couple of these programs for you. The big one, the one that's helped so many homeowners, over 600,000 homeowners have gotten principal reductions and other forms of loan modifications under HAMP, H-A-M-P, the Home Affordable Modification Program. Another program under the Making Home Affordable umbrella is HAFA, the Home Affordable Foreclosure Alternative, which is where your lender approves of a short sale, and typically you receive approximately $3,500 in return for exiting the property and keeping the property in good condition upon your exit. The lender agrees to the short sale and they waive the deficiency. Then there is HARP, the Home Affordable Refinance Program, where your lender agrees to refinance your property even though you have negative equity or you have less than the typically required 20% positive equity in order to refinance a property. So these are just 3 examples of the different programs that are available under the government's Making Home Affordable umbrella of programs that are available to homeowners today. Now, the Making Home Affordable program was supposed to expire this past June, but Congress realized it was such a successful program that it has been extended through December 31st of 2015. So you've got another year and a half to take advantage of these incredible programs that the government is offering. Now, I didn't know this, but before the Making Home Affordable program even came out, lenders were offering homeowners loan modifications. Of course, they didn't advertise that, but they did it for any homeowner that was in serious default and was at risk of foreclosure or was in foreclosure. They would kind of on the side say, okay, look, we're going to agree to help you out. Give us certain documents and we'll renegotiate the terms of your existing mortgage to create a more affordable payment for you, because they didn't want to lose that customer and they didn't want to have to put the property through the foreclosure process because it costs them money. Well, the lenders had all different ways of modifying at that time. Once the Making Home Affordable program came out in March of 2009, all those lenders that had all different kinds of loan modification programs remodeled their loan modification programs to look almost identical to HAMP, the Home Affordable Modification Program. Why? Because it was the best program out there. It worked the best. The formulas were easy, but not every program, every property fit under HAMP. Investment properties used to not be able to qualify for HAMP. They do now, but for the first 3 years, they didn't qualify. So lenders were willing to modify investment properties, but they knew they couldn't do it under HAMP. But they did it almost identical to a HAMP program, but for an investment property. A jumbo loan can't qualify for HAMP. So if your loan is for over $729,000, you can't get a HAMP loan modification on it, but you can get a loan modification through your lender. It just won't be HAMP. But on a HAMP loan modification, this is what it normally looks like. Your lender will typically modify the terms of the existing mortgage, taking the interest rate down as low as 2%. That's very typical. It's what you see as a tiered interest rate, 2% for the first 5 years, 3% in year 6, 4% in year 7, and locking in to the interest rate that was available for a Fannie Freddie on the day that they issued the permanent loan modification. So normally we see it locking in at about 4.25% in the 7th year. So 2% for the first 5 years, but we also see HAMP loan modifications that are 2% for the entire term of the mortgage, which could be whatever your term was when you qualified for the loan modification. Maybe you've been paying for 8 years, so you have 22 years left on your loan. Maybe they extend it back out to 30 years. Maybe they take it out to 40 years. So they can extend the amortization schedule. They can extend the term of the loan as well. So that's another factor in the loan that they can modify. The third thing that they can modify as part of a loan modification is the principal. If you have negative equity on your property and your loan is not a Fannie Mae, Freddie Mac, VA, or FHA loan, and you can go to websites to check to see if it is one of those, if it's not one of those loans, you could possibly see your lender reduce the principal. What does that mean? Well, if your loan amount is $300,000 and you owe and the property's worth $200,000, you might be eligible for a principal reduction of over $100,000. Stay tuned. After the break, we'll talk about how.
And I want to hear about that big settlement with the banks earlier this week. Definitely.
That was another good one.
You're listening to the Home Mortgage Law Show, 800-974-2712. 1-800-974-2712. Toll-free number for a free consultation at the law firm of Morris DuPont. Much more of the Home Mortgage Law Show right after this. You're listening to the Home Mortgage Law Show, brought to you by Morris DuPont PA and Regal Tax Advisory Group. Our phone lines are open. We're taking your calls. 866-610-NEWS. 866-610-6397. AT&T Wireless customer star 610. Attorneys Shay DuPont and Will Morris in the house for you.
There you go. We're here.
We are.
We're live.
And we were talking about the different ways that a lender can modify the terms of your existing mortgage under HAMP, the Home Affordable Modification Program. And Natalie brought up a really good point. And that
she did she?
Yes, she did.
Oh, okay.
She brought up, the point that there are keeping these settlements that the government has with lenders over their wrongdoing, and that's providing additional incentives for your lender to modify the terms of your existing mortgage and give you a principal reduction. I gave the example, you owe $300,000 on your home. Your home is now only worth $200,000. 200,000. I meant 200,000, 300,000, 200,000. So you have $100,000 of negative equity.
Okay.
If you can qualify for loan modification, your lender might actually forgive that $100,000 of negative equity. Mm-hmm. So let's talk about this latest settlement. I mean, in the past, we have talked about the national mortgage settlement where Bank of America, JP Morgan Chase, Citi, Wells Fargo, and
the big guys.
Yeah, GMAC, SunTrust, a couple of the other ones actually eventually opted in, where they gave $50 billion of gross relief to homeowners, which equated to more than $20 billion in credited relief. That settlement has been completed, so those mortgage lending companies have actually given that relief. They've given those principal reductions and other things.
We saw a lot of benefit for our clients from that.
I did, but you know what?
I don't think it was enough. I mean, I think all of our clients should have benefited from it. But quite frankly, we did see our fair share of it, and now that that's over, these other settlements you're about to talk about. I mean, they should be publicized.
You know what? I was about to talk about it, but now I'm going to table what I wanted to talk about was Ocwen, but I want to table it for a minute, and I do want to go back to the national mortgage settlement because the official, report from Joseph Smith, who was the monitor of the national mortgage settlement, came out this past week saying, okay, everybody has completed their obligations under the national mortgage settlement. They've given their relief to homeowners, but there was a little tiny thing in that report,
footnote.
Yeah, that really bothered me. Listen to the way it was done. The office found that more than 600,000 families received some form of relief, which was broken into these categories. So listen carefully to these categories, folks. 17% refinancing assistance. Okay, when you refinance, how are you giving people money?
You're not.
I mean, you're just refinancing them. Maybe you forgave closing costs?
I don't know how that works. It doesn't seem to me that you're giving them any sort of relief.
Right. I mean, if you're refinancing someone, that shouldn't be included in principal forgiveness. So if you're just refinancing, how are you getting credit for that?
I mean, a person could do that outside of the settlement.
Exactly. So that's the first one. Second one, 37% first lien principal forgiveness.
Okay,
I like that.
Fair enough.
37% of people got a first lien principal forgiveness. That's what I was just talking about. Third, 15% second lien principal forgiveness. What? Less than half of principal forgiveness on second mortgages than they did on first mortgages?
Right. That is kind of warped.
I find that hard to believe, considering second mortgages have a lot more negative equity than first mortgages do.
And it makes sense to forgive a lot of those principals in the second because, quite frankly, they're unsecured.
Yeah, so that was weird. Now, this is the worst one to me. 31%, which is the second biggest percentage of all the ones they've mentioned here, 31% is categorized as other relief.
What is that?
Huh?
What's that?
I'm sorry. What is other relief?
What is other?
What does that mean? You either give somebody principal forgiveness,
right,
or you don't.
There's no other way.
So what this refinancing assistance?
Forget that.
Forget it.
Right.
It makes no sense to me. But what other relief is there than forgiving principal?
I don't know.
So excuse me, Joseph Smith.
I'm trying to think.
The National Mortgage Settlement Monitor. Could you please break down that 31% for me?
That's a huge number.
It's a huge number, and we're talking about billions. 31% means billions of dollars, but you're not categorizing it? I think we need a little more specificity, sir.
I thought the 31% should be attributable to the second mortgages relief. Maybe
Yeah,
that's a better number.
Yeah, but
What
it's
is this
not.
other?
I don't know. So we need to go back and we need to get that information because believe me, folks, we write letters to Joseph Smith every single week at the law firm of Morris DuPont. Why? Because we're complaining that some of these lenders are not complying with the national settlement. So we go and put their feet to the fire by filing complaints with the Consumer Financial Protection Bureau, and we CC Joseph Smith so that he knows that there is one of the lenders that was supposed to be complying that wasn't. So I think we need to write another letter.
Just to find what this other is. You know, the only thing I can think of other being is like maybe a reinstatement and waiving the past due amounts. But to me, that's just like a refi. I mean, it doesn't give the person any sort of relief. It put them right back in the position of paying a mortgage, which they couldn't afford. That's why they defaulted in the first place.
Good point. Well, so and we as lawyers, we certainly don't want to assume.
Right.
We don't want to jump to any conclusions.
God forbid we do.
So we need to have some specificity. So, folks, we're going to try and get that specificity for you so you can see whether or not these lenders, who we really see as nothing more than, sanctioned criminal organizations, see whether or not they actually complied with that huge national mortgage settlement wherein they were supposed to give $25.6 billion of relief to you, the homeowner.
And so also missing in those numbers is that a lot of it weren't actual hard dollars. A lot of it were credits they were supposed to be given. Like, for example, when they forgive some debts, they were given $1.25 per dollar for forgiveness. So a lot of it was not hard money, and $25 billion sounds like a big number, but it really wasn't a lot of out-of-pocket monies. Look,
very little.
Right,
very,
either way
very
you
little.
cut it, I'm just happy that some homeowners got some relief from it. But you're right, that 31% other, I'm not quite sure I like that sort of lumping of everything in there.
Yeah, that's not going to work for me. That's
Right.
for sure. No, we're watching for you, folks.
Right.
So
That's our job.
yeah. So let's get into now the latest player who's now had to settle because of their wrongdoing. It's Ocwen. Oh, yeah, you've heard me do the commercials this past week because I was so excited. I didn't get a chance to talk about it with you on the air last week, but after the show ran, you better believe I went back in the booth and I cut some commercials reminding everybody, guess what? Ocwen just made this huge settlement wherein they would agree to provide $2 billion in relief to homeowners. Before you
get into that, Shay, other than us talking about it on the radio all the time, do these settlements get a lot of airtime?
I never hear it.
Never. How are homeowners supposed to know about it?
You know what? The general media thinks that this issue is played out.
Mm-hmm.
It was hot and sexy back in 2009 and 2010, and everybody was running stories on it. Oh my gosh, how many times a week did we get contacted by different media outlets wanting to get quotes from us about this and Wells Fargo and Chase and this happening?
This is worn off, huh?
And oh my gosh, when's the last time we got a call from a
been a
media
while.
outlet,
It's been a
right?
while.
See, we were on the CBS Evening News with Scott Pelley and showing, people doing strategic defaults and, how negative equity is affecting, these poor homeowners.
Right.
And yeah, that's not sexy to them anymore.
Old news.
Yeah, it's old news. Let's go chase that, God bless whatever happened to that Malaysian plane.
Right.
But this is still important stuff, especially because Ocwen is the fourth largest mortgage servicing company in the United States. So this is what it is. Ocwen, which is a publicly traded Florida corporation, it's headquartered in Atlanta, Georgia. It's the largest non-bank mortgage servicer and the fourth largest servicer overall in the United States. And this Ocwen, which is really, the name is Ocwen Financial Corporation and its subsidiary Ocwen Loan Servicing, it has to provide $2 billion in principal reductions to underwater homeowners. It entered into a consent order which addresses Ocwen's systematic misconduct at every stage of the mortgage servicing process.
It really is every stage.
Oh, yeah. Oh, they were doing some nasty stuff.
Mm-hmm.
And guess what? This will also include if Litton Loan Servicing was your mortgage servicer at some point, guess what? You might qualify for a actual settlement check coming your way. We'll talk about it after the break.
And you're listening to the Home Mortgage Law Show, 1-800-974-2712. Toll-free number for a free consultation with these guys, the experts at Morris DuPont, PA. 800-974-2712. Just pick up the phone right now. There's people there in the office waiting for your call. 800-974-2712. Much more of the Home Mortgage Law Show right after this. You're listening to the Home Mortgage Law Show, brought to you by Morris DuPont, PA. We have attorneys Will Morris and Shay DuPont. The show's also sponsored by Regal Tax Advisory Group, and it's that time of the year where you have to start filing your taxes. Well, Regal's a full-service tax preparation company. Toll-free number, 800-6000-TAX, 800-6000-829.
Oh, God, Regal is the best.
Aren't they, though?
Oh, I am so happy. And my daughter's doing her taxes. She's going to get an actual refund. I'm not getting a refund. You know why? Because Regal set it up this past year. I'm getting smarter. Every year that I've been using Regal, I get smarter and smarter. Well, they advise me better and better in that I'm taking their advice more and more. Because now I'm paying.
I need to do that.
Yeah, because I'm paying quarterly. And it's right on the dime. So really, I don't think I'm going to owe anything, and I don't think I'm going to get anything. But that's fine.
Sure.
That's perfectly fine with me. I've got all my paperwork organized. I'm so organized this year. I'm so proud of myself about it.
I'm organized, too. I got a shoebox.
Oh, God.
I mean, don't knock the shoebox,
I
really.
use my FedEx
Envelope,
I'm
there you
kidding.
go.
I'm kidding.
I'm
kidding.
See, now that's a joke. That's what we call an inside joke, folks, because I never knew how many people
Use a FedEx.
use FedEx envelopes for a filing system
Until you start doing this stuff, right?
Until we started giving out free consultations, because so many people come in for their free consultation with me, and what do they have with
A
them?
FedEx
A
envelope.
FedEx envelope.
And it's their filing
It's their
system.
file.
Yeah.
Right.
Yeah.
We have
I
a
love
call.
it. Oh, okay.
Hi, Frank.
Hi, Frank.
How are you doing today?
Oh, gosh, I'm on cloud 9. How are you?
It sounds it. That's great news.
Yeah. What can we do for you today?
So I have a couple of things. I am a realtor here in Fort Lauderdale, and I have a couple comments. One is I had a client about 3 years ago who did get a principal reduction in their mortgage from I think they owed about $380, and they got it reduced to about $240.
Yeah.
Nice.
Not
Such
unusual
an easy
anymore.
process. Yeah. So I just want to vow for that. And it
Thank you,
wasn't
because a
difficult
lot
at
of
all.
people, we used to say we would say it right on the air in 2009 and early 2010.
Right.
Urban
Oh,
myth.
urban myth. Now we're actually surprised when a loan mod comes in
Without one.
without one.
Right.
Yeah, we're like, oh, darn, how did that happen?
Right. Well, when it came in, I almost thought it was fake because it was almost too good to be true.
Mm-hmm.
So I work with a regular attorney, an attorney, but we went to a second attorney because it was almost too good to be true, but it was true, and they did very well, and it saved their house.
It's shocking, right?
Right.
How excited are your clients when?
Yeah, well, I'm the hero forever.
There
Right.
you go.
I'll
Of
be the
course.
realtor
Good for
forever,
you.
So that's a good thing.
Yep.
But I have a personal problem.
Okay.
And this is my situation. And I've closed, I think, we keep count of them, 312 short sales since 2007.
Wow.
That's
So
a
we've done a lot
lot.
of short sale work.
Wow.
But my situation, and I did have to short sell, but I had the World Plus pick a pay. The one where you went neg-am,
Yep.
interest only 15 or 30 a year, and each month you got to choose. Well, for a realtor, that was really a good option because if you have a bad month, you can at least pay the minimum. But then it got sold to Wachovia, and at that point, it was that they formed this class action suit, which I opted out because they wanted to pay me like $39 or something, which wasn't acceptable on a $400,000 loan. So I opted out, and they considered it a predatory loan and all that other stuff. So the attorney I work with doesn't really specialize in that, so they really can't help me. So because I still can go for some compensation for my loss, couldn't I? Or is it too late?
It probably isn't. I mean, you do have the ability to opt out of a settlement in a class action and then pursue your own lawsuit. I mean, I forgot how long ago was that?
Well, actually the house is still under my name, so I haven't disposed of it yet.
So technically, you
And
haven't suffered the injury yet. You might still have time. Yeah.
you think so?
Yeah.
And when the attorney that I work with on a normal basis, typically, because we don't do short sales without attorneys, we just don't do it.
Oh,
We
good
have
for you.
the equator and all that stuff, but I have to do it with an attorney. But is that something you can, if I set up an appointment, that we can talk if it's possible to do something?
Yeah, I just want you to make sure that when you set up the appointment, you set up the appointment to speak to my partner, Will Morris, or Jennifer Barrow. You don't want to speak to me because I'm not in the litigation department. I manage the loss mitigation department, so I deal with the short sales, the loan mods,
Right.
all that stuff.
Right.
Will and his team deal with the litigation, so you'd want to probably meet with Will or Jennifer, and that would be out at the Doral office. But yeah, absolutely come in. And then why are you not doing your short sales with us?
I don't know.
I don't know either.
Perhaps when I sit with Will, because we're still getting them. They're not as plentiful as they were,
right.
but we're still getting them. And, it's typically the people that have been holding on. But yeah,
there's going to be a lot of HELOCs that reset. So,
right.
The HELOC resets are going to be coming up. And also we've got the 5 years on the loan modifications that were done in 2009. Those are going to start going up. So there's going to be some things where I think we're going to see some, a little tick up in the short sale activity or foreclosure activity. But yeah, come on down to the Doral office and I'll walk you around and I'll show you the short sale department, the loss mitigation department, and try and convince you that there's look, other people can do this stuff.
And the attorney's title department.
Yeah, attorney's title, our title company. There are law firms that can do this stuff as well as we do. No doubt about it. But nobody does it better. It's not possible.
Yeah, well, I like that because I've been a listener of your program for years. I don't get every Saturday to listen, but when I do, it's great. But, I like the full service because, for example, some of my clients end up needing bankruptcy, and then you have a bankruptcy department, don't you?
Yes, we do.
Right. That's really special because most attorneys that I work with, they're real estate attorneys, but they don't do bankruptcy. So it's not under the same roof. Now we have to go to a different office, and, it gets a little more complicated. So I think the fact that you have everything under one roof really is advantageous to not only the realtor, but especially the client.
We say that all the time.
And we do. And another thing that we do, which is because our clients were needing it, is the debt settlement. So if they don't want to do bankruptcy or they can't qualify for bankruptcy, they can do the debt settlement and the credit restoration, because after the short sale is complete, very often, remember what you kept seeing, Frank, is you'd see your clients come back and complain and say, wait a minute, I did a short sale. My property never went into foreclosure, but my lender reported it to the credit reporting agencies as a foreclosure.
Right.
So that needs to be corrected, and we do those corrections. And then, once the short sale is complete, they have had 2 hits to their credit normally. They defaulted some amount of time, even if it was a rolling 60 days, they did default. And number 2, the lender has reported it as settled for less than full amount. So there was about 150 point on average, diminution in their credit score. So we want to help them improve that and get that credit score back up so that after that 3-year period where they're really not able to qualify for most mortgages, in that 3-year period, we can make sure that the credit score is maximized. So at the end of that 3-year period, they can boom right away qualify for that new mortgage and get into a property that is affordable.
Right. And we do stress that to them as part of the introduction to short sale before they even get into it. And we now, because it's 2014, are getting short sale clients from 2009 who now qualify to buy again, but they have a couple blips on their credit. We get that fixed, and we're on our way to
but those blips on the credit can take 3 to 6 months to clean up. So we want to start that cleaning up of the credit score immediately after the short sale is complete. Make sure it's not reported as a foreclosure if no foreclosure was ever filed. and then show them how we're going to start eating away at some of that negative stuff on the credit report, settling that debt that was showing as charged off or not charged off. It hadn't been paid for 3 years, so that by the time that 3-year time period comes up, they're ready to qualify right off the bat. So it's really looking short-term problem solving and long-term problem solving, doing both so that you're looking at the big picture for the client. So
Right.
look,
And
thanks.
I think that's a great strategy.
Yeah.
It's full service.
Yeah,
And
I want these
really
people to
admire
know that
that.
they can trust me for the rest of their lives. I want them to come to me with their legal issues and know that I'm going to do right by them. We have to take
Right.
a break. Thanks so much for calling the show, Frank.
Thank you. And I'm going to call Will Morris.
There you
I
go.
have your number already because I first called it, but I'll call and make an appointment.
Great. Thanks, Frank.
Awesome. 1-800-974-2712. That's the number Frank is using. That's the number you should use. 1-800-974-2712. Toll free to reach Shay, Will, and the entire staff at Morris DuPont. 800-974-2712. Much more of the Home Mortgage Law shows and your calls right after this. You're listening to the Home Mortgage Law Show, brought to you by Morris DuPont, PA, and Regal Tax Advisory Group. Attorneys Will Morris and Shay DuPont here for you. Our phone lines are open and it's toll-free to ask your questions. Have your consultation right now. How about that? 866-610-NEWS, 866-610-6397. AT&T Wireless customer star 610.
Frank brought up something that is important to me that I don't think I've ever talked about on the air before, and that is one of my business philosophies. I think Will shares it. I don't even know if we've articulated it together, Will.
I'm sure we agree.
That's the way we are. Isn't that nice to have a partner like that? But it's that, look, you can do business one of two ways, and I've seen lawyers do business typically the first way, and that is you get a client and you gouge them for as much money as you possibly can.
Right.
You bill for every second, and everything that you do, you make sure you charge them for it, and you get the money and run.
Right.
And you end up with a client that maybe you did a great job for. Maybe you really did a spectacular job for them, but you charged them out the wazoo for it.
They feel kind of used.
And they're happy with the results, but it really cost them a lot of money, and it left a kind of a bad taste in their mouth about lawyers. Because even though the result was good, it still cost a lot of money. Or there's my business philosophy. And that is, number one, we typically on 95% of the things we do, we charge a flat fee. And we do not sit there and nickel and dime past that flat fee. I have it in the retainer agreement that I can charge for this and I can charge for that as costs and fees. I have never charged anybody for any of those costs and fees. I do it in case I get, number one, a really difficult case where I'm spending gobs and gobs of money, but it just never happens.
Or if we have to pay somebody else for some services they did on behalf of the client.
Right.
Then
A
there's
private investigator, the mediator, whatever. So we charge flat fees, and we charge very, very reasonable fees. And then when clients say, would you please do this? Will you please do that? And it's outside of the terms of the retainer agreement, I do it anyway.
Right.
I let them know I'm doing it. I say, well, that's not really part of the retainer agreement, but I would be happy to do that for you because I want them to understand I don't need to do this, but I'm going to do it for you because you're a client and I want to help you. So a lot of times we do things outside of the four corners of the retainer agreement because I want them to know, look, I'm glad you trust us. I want to do this for you. I already have the resources. Let me do it. And it's not even worth sitting there nickeling and diming you about.
Right.
The point is I am going to charge very, very reasonable fees because instead of you coming to me once and then having a bad taste in your mouth, even if I was successful and never coming back to me again, I want you to be a lifelong client. The law firm of Morris DuPont hopefully will be in existence for a second generation because Will and I both have children, and we'd like to see the law firm exist past our demise. The only way to do that is to build up a clientele now that trusts us, that understands that no matter what their legal needs are, they know that they can come to Morris DuPont and they will be treated fairly,
Right.
that they will be treated with respect, that we will not nickel and dime them, that we are not trying to just take their money, but that we genuinely care about them, They know us like not, I'm not going to be corny and say like a family, but just that, look, you need to have professionals around you that you can get, rely on, whether it's your dentist, whether it's your accountant, but everybody should have a lawyer that they can go to for a landlord-tenant issue, for a car accident, for a prenup, for whatever it is. You should have any contract you're going to sign. You should be able to have a lawyer that you can go to that you can have look at it and isn't going to charge you an arm and a leg to do it. We want to be that attorney for you. We have been in existence long enough where we have had clients come back and we've done plenty of other things outside of what they originally retained us for. Why? Because they do trust us, because they know that we're going to treat them fairly. So, I don't know, Frank kind of made me think about that, and I wanted to articulate part of my philosophy about doing business.
And it happens to be mine, too. How many times have you gotten people, you call them up on the phone, and they go, wait a minute, are you the person on the radio? I can't believe you called me. So,
every day. Yesterday I got it.
Listen, you're my client. Of course I'm going to call you. You think I'm too big to call you?
Yeah.
What does that mean?
No, that's silly. Yeah. Anybody who has those, feel free to call the radio station and confirm that we do the callbacks ourselves. And sometimes it's not even really part of what is going on with their file. But what happens is we've got, departments that we oversee, loan modification, short sale. And when there is something that the client asks for and the loan mod consultant thinks, well, that's kind of outside of my area that I think I should be talking about. Of course I'm going to call the client. Who else is going to call them? Yeah. That's what I'm supposed to be doing. I'm your lawyer. I'm going to be giving you the advice. I'm going to be answering your questions for you. And we're going to be discussing strategy over and over and over again until you feel comfortable. Because it's not me deciding what's going to happen with your property. It's you making the decisions. I'm just giving you the information.
And the way to get it done.
Exactly.
We have a call. John, welcome to the show.
Hi, John.
John.
Hello, good morning. Good afternoon.
Hey, what can we do for you today?
Okay, the question I'd like to find out is the homeowners association of different communities are selling quick claim deeds on back homeowners' fees or whatever. There's a lien placed on the property by the homeowners. They go around and sell these liens.
Yep.
Mm-hmm.
When the bank comes to foreclose, after a year or whenever the bank comes to foreclose, can these investors retrieve their money and can it be looked at as a lien settlement by the bank and they pay back these investors some of the money that they have sold, that they received these quick claim deeds for?
Short answer, nope. The fact of the matter is when an investor buys a property at an HOA sale, they buy it subject to the first mortgage.
Yes.
Okay.
So this is the process, and this is, buyers beware kind of thing. Foreclosure auctions can be a foreclosure of property by the mortgage holder, or it can be a foreclosure by the homeowners association. Let's say that you're current on your mortgage, but you defaulted on your homeowners association fees. And 6 months after the default on the homeowners association fees, your homeowners association files a foreclosure action against you.
Which you have the right to.
And you ignore that foreclosure action, and the homeowners association completes the foreclosure and they take back the property.
Or the property sells at a foreclosure sale and a third party buys it.
Yeah.
Okay.
Now that person that bought the property at the foreclosure sale now has title to the property, but they took the property subject to there already being a mortgage by, let's say, Wells Fargo.
And by the way, Wells Fargo is in the first position. The person who took the title to the property, their claim to the property is secondary to the claim by the first mortgage holder, which is, in Shay's example, Wells Fargo.
Right. So Wells Fargo...
The question is, wouldn't that lien be considered just like a FPNL lien or a water lien or something like that? Wouldn't they have to settle on those liens? So why are they not settling with the investor? What's the difference?
The difference is when the first mortgage decides to foreclose, they foreclose against every interest. All secondary interest gets foreclosed. Okay? So if the person who buys the property gets title to it, once the first mortgage foreclosed and they name them as a party to the lawsuit, every interest that's secondary or subsidiary. What's the word, Skay? Is it subsidiary? So I think it's secondary to
Secondary.
the primary mortgage. They get wiped out.
Okay, so what about if there's a lien like with the property for, say for example, FPNL?
Yeah, that can get wiped out
They
too.
get wiped out
Yes,
also?
all secondary liens get wiped out.
Right. Mechanics liens, FP&L liens, credit card judgment liens, IRS liens are all wiped out by the mortgage foreclosure, but they are not wiped out by the HOA foreclosure.
Okay. Can the person investor go back and sue the HOA to get back to retrieve the money?
Good luck with that. No, they can't.
No, it was
No.
a fair sale.
Fair
Buyer
sale.
beware.
Right.
And we need to go to a break. So, John, hold on just a second. We'll get back to you right after this. It's 800-974-2712. 800-974-2712. Toll-free number for a free consultation at Morris DuPont. The Home Mortgage Law Show continues right after this.